First video. Woo! Let's give this a shot, see how this. I don't like it. And here we go. Hello everyone, and welcome to my very first video. New year, new me, new job, similar message. So what I wanted to start with today are what are known as the four most kind of primary or common loan programs. Almost every lending institution offers some form of these. So make sure and stay tuned to the end of the video where I will tell you why it is you're going to want to talk to me as opposed to just anybody else. Now, before we get started, I wanted to make sure and go over a couple of definitions of terms that I'm going to be using that are not super common. The first one is debt to income ratio. And a debt to income ratio is using your monthly expenses divided by your gross monthly income. So if you make $4,000 a month and you have $2,000 of expenses, and that includes necessary expenses like credit cards, car payments, student loan, you would have 50% debt to income ratio, or 50% of your money each month is used towards necessary debts. The other thing I wanted to talk about is mortgage insurance. Mortgage insurance is an insurance policy that essentially protects the lender in case anything were to happen to where you were to default on a loan. Circumstances come up in people's lives where they can't make their mortgage payment anymore. It protects the lender or any lending institution to make sure that we can continue to lend on everybody else that's needing money in order to be able to buy a home. So to get started, the very first thing I wanted to talk about is what is known as conventional mortgage lending. It's the most common, the most traditional. The down payment requirement for a conventional mortgage is as little as 3% for specific qualifying programs or some first-time home buyers. If you don't fall into either of those categories, then the traditional amount is 5%. They go up to 50% debt to income ratio and require 620 credit scores or higher. So this is a really great loan program if you have some money saved up, if you've got good credit, you've been paying your bills, you've been at the job for a couple of years, and we offer a lot of different variations of it, which I'll talk a little bit more about here shortly. The second program I wanted to make sure and cover is the FHA, it's the Federal Housing Administration. The Federal Housing Administration, the FHA, really is commonly known as a first-time homebuyer program, but the myth there is that it's not actually just for first-time homebuyers. It is a program that is available for everyone. Now, the reason the FHA is an important program is it allows people a little bit more flexibility to get into homes. If you've had any credit issues in the past, they are more flexible on their debt to income ratios than a conventional mortgage. So with the FHA, the requirement's 3.5% down. They go down to 600 credit score and allow certain types of derogatories to be okay on your credit compared to other programs. And they go up to, I've seen as high as 55% debt to income ratio. That gives you more flexibility and more buying power. So it's important to keep in mind for the FHA. The third program I want to talk about is the USDA, the United States Department of Agriculture. So this program was put into place to encourage and help people to buy in more rural towns. Unfortunately, places like Portland, Salem, Springfield, most homes located in those areas don't qualify. But if you're in the Portland area, you have Beaverton, you have Tualatin, you have a lot of outlying areas that you can use the USDA program for. In the Eugene area, there's Veneta, Junction City, Cottage Grove, Cresswell. There are a ton of places that qualify for the USDA. So the cool thing about the USDA, 0% down payment. They also go as low as a 620 credit score. And their ratios are a little bit more strict. They go about 41 to 43% debt to income ratio, kind of depending on your circumstances. But this is still a phenomenal program with 0% down. And if you're looking for some of those outlying areas, this is a great program for you. So the last program that I want to talk about is the VA program, the Veterans Administration. This is a very small way that we can give back to the veterans that have laid so much on the line for their families and their country. When veterans finish with the military, they get what's called a certificate of eligibility, and that allows them to look into the VA program. The cool thing about the VA is, again, 0% down. They go as low as 600 credit scores. And they are more flexible on their debt to income ratios, going as high as 55%, again like the FHA. The other great thing about the VA is that there's no mortgage insurance, and traditionally the rates are going to be lower than in some of the other programs that are offered. Not only is there a federal VA program, but there is a state VA program. Depending on your specific circumstances, we have the ability to look at both options, and not everybody offers that. So with all those loan programs available, and ones that you can look for basically anywhere, why come talk to me? Well, first and foremost, those definitely aren't the only 4 programs that we offer. For conventional, we have some options that are actually no mortgage insurance. Traditionally, if you put less than 20% down on a conventional loan, you have to bring mortgage insurance to the table. For the FHA, we have what's called the Genoa program. It's 100% financing, again, 0% down, and that 3.5% down payment is either repayable or forgivable depending on your circumstances. So even there, between the USDA, the VA, and the Genoa program, that's 3 programs where you are coming in with 0% down payment. That so many times is the biggest thing keeping people from buying houses. But here's the thing, a conversation about qualifying for a house isn't just about determining what programs you qualify for. It's about having a conversation about your retirement plans, your investment opportunities, what your plans are for you and your family for the future. Is this a long-term or a short-term solution for you? Is this a forever home? All of those things will determine which program is the best fit for you, which one is going to make the most sense. And that's why it's important to call me and have a conversation about it. It's not just about offering to you what's available. It's about having a conversation about what is going to work best for you. So if you have any questions, comments, leave them below. I will definitely be getting back to you on anything and everything that I can possibly help you on, and I look forward to hearing from you. Have a wonderful day.